Okay, I'm going to go over a lot of information in a really short span of time. There's going to be a lot of information on the PowerPoints. As Doris said, they're going to be available to you, so I'm just going to kind of gloss over it, hit up the main points for all of you, because it's a really big law to explain in about 20 minutes. So bear with me here, and I'll try to make it as clear as possible. First and foremost, my little thing, I am not a lawyer, I am not an accountant. I'm going to explain the way the law is. Everybody has their own specific needs and different types of businesses. Please contact your accountants and your lawyers. That's why you pay them the big dollars, so they can advise you as to what to do. With that being said, as you all know, as small business owners, the number one concern for small business has been to be able to provide affordable health care to your employees. And the reason that is because when you have 5 employees and let's say they're all of the older persuasion, they're going to be at a higher risk than the younger, male versus female, sick versus healthy, all that type of stuff. Big companies, what they do is they pool the whole entire risk pool together of 500 employees, so it kind of all ends up balancing out. So with that being said, the administration kind of realized we need some type of healthcare reform, and they came up with this big, huge thing called the Affordable Care Act. So, what has been done under the Affordable Care Act? First and foremost, this is not a new law in the sense that I know in 2013 it's been talked about. This law has actually been on the books since March 23rd of 2010. And what has been done since then is that insurance companies now face limits on their administrative spending, meaning that 80% of consumers' premium dollars are actually spent on medical costs and 20% are spent on insurance companies' health premium costs. Also, if an insurance company is going to increase their premium rates by more than 10%, they have to disclose in writing as to why, and they may be subjected to state or federal insurance review. Also, as of this year of 2014, I'm sure you've heard this, insurance companies can no longer deny coverage for chronic or pre-existing conditions. My favorite one, because I didn't know about this before I got into this whole Affordable Care Act, insurance companies can no longer charge higher premiums to females. Yay. So men, you're joining us up in the higher ranks now. As I mentioned, what the whole Affordable Care Act is doing is trying to pool this risk pool together. So it's pretty much, let's get all, I don't know how many millions of people in the United States there are. I'm gonna go 6, maybe 1 billion, I don't know. Anyways, what they're trying to do is pool this all together so that the baby boomers and the millennials outweigh each other, the females and the males outweigh each other, people who have chronic or pre-existing conditions outweigh the healthy ones, so it's trying to create some type of balance. And last thing I want to really quickly touch about, again, like I said, this is going to be really quick, is that now insurance plans must have what are known as the 10 essential health benefits. I can get you what those are, but pretty much it's hospitalization costs, ambulatory costs, prenatal health care, that type of stuff is now all going in, all insurance plans must have it. So, as a business, how does this impact you? So, as Arthur mentioned, there are some tax credits available to small businesses. So, if you as a small business owner choose to provide health insurance for your employees, between the years of 2010 and 2013, there has been already implemented in the law a tax credit available to small business owners. If you're a for-profit, it's been 35%. If you're a non-for-profit, it's been 25%. I like to bring that up because I realize it's 2014, but some people are still working on 2013. So if you fall under certain criteria, which I will explain, talk to your accountant to see if you can't get this tax credit. As of 2014, that healthcare tax benefit has been increased to 50% for for-profits and 35% for non-for-profits. Again, however, to receive this tax credit, you're going to have to meet certain criteria, which I'll go over. So, the 2 questions that I always like to tell small businesses when I'm trying to help them figure out about if the ACA is going to impact them is, how many people do you employ and how much do you pay them? Because that's going to dictate whether you have to pay the tax premium, you may be subjected to the employer shared responsibility payment, or nothing's going to happen to you. And I'll go over each one. But here's pretty much the 3 different bubbles. 24 or fewer full-time employees, up to 50, so between 25 and 49, and then 50 and above. So the tax credit, as I touched upon, here are the criteria to meet that. So if you want that 50% for for for-profits, 35% for non-for-profits. You have to meet these criteria. So first and foremost, you must have 24 or fewer full-time employees. You must have average annual wages of $50,000 or less. As an employer, you must contribute 50% or more towards employees' self-only premium costs. And then you also have to purchase the health plan and the health insurance plan in what is known as the shop. And I'll kind of give you some definitions a little bit about exchanges, marketplace, shops, individual, all that type of stuff. So now, one thing to note though is that this tax credit is based on a sliding scale. So everybody says 50%, that's if you meet the criteria at the bottom, which means you have 10 or fewer full-time equivalent employees with average annual wages of $25,000 or less. Again, you still contribute 50%, and that insurance plan must be purchased in the shop. If you meet those, you'll hit the maximum of 50% tax credit. However, if not, if you're somewhere in between that, if your average annual wages are in between 25 and 50, if you have between 10 and 25 full-time employees, 10 and 24, then it's going to be based on a sliding scale, and your accountant will help you figure that out. So as I said, this is kind of a recap of this. Between 2010 and 2013, the tax credit has been up to 35%. In 2014, it's gone up to 50%. Now, as Arthur mentioned, though, that tax credit is going to be claimed for 2 and only 2 consecutive years. Meaning, if you claim that tax credit in 2014, you have to claim it in 2015, and then it goes away. However, you do not have to claim it in 2014. So you can do some financial forecasting and see where it behooves you to actually claim that in what year. However, remember, if you claim it, let's say in 2016, you're gonna have to claim it in 2017, okay? So just note with that, and then it goes away after the 2 consecutive years. Okay, like I said, this is gonna be down and dirty and nitty and gritty here. So, and I'm also a New Yorker, so I'm a really quick talker. Sorry. So if you fall between the 25 to 49 employee category and you choose to offer your employees health insurance, unfortunately there's no federal healthcare tax credit. There may be certain state credits though, and you're gonna have to look into which state or the district you are in. Okay, health insurance marketplaces. Do I have it? Okay, I'll talk about this. Okay. So a couple of definitions here I like to give people. So you hear Arthur mention the Small Business Health Options Program. You've probably also heard in the media this thing known as the SHOP. That's the acronym, that is the Small Business Health Options Program, is the SHOP. Okay? And you've also heard about marketplaces and exchanges. First and foremost, they are the exact same thing. Marketplace, exchange, those 2 words are synonymous. And the way you can think about these marketplaces, exchanges, and I actually have somebody who's heard this presentation, so I'm sure he's heard plenty of these analogies before. I find them helpful though, is these marketplace and exchanges, they're a shelf. That's all it is, okay? So you still have the producer. So if you go into Harris Teeter, for example, and you're perusing all the different hot sauces, okay? You have a bunch of different producers putting their product on the shelf and a bunch of consumers looking at them, okay? That's exactly what this is doing. The marketplace, the exchange, is it's a shelf where the producers, the insurance companies, are putting their product on there, and you as the consumers, either as an individual or as a small business, are going to come and look at the products, okay? I like to stress this because this is not government healthcare. You're still dealing with Kaiser, Aetna, Blue Cross Blue Shield. You're still going to be dealing with those guys. All the government, all the administration has done is made a shelf, okay? So with that being said, we have the shop and we have also what's known as the individual marketplace. The individual marketplace is where everybody who does not get employer-sponsored health care or self-employed business owners go to purchase their insurance in this individual marketplace. The shop is where business owners are going to go and purchase and look at the plans for their employees, okay? 2 different marketplaces here. So does that kind of make sense a little bit between the individual and the shop? Remember, shop is for employers to purchase insurance for their employees. Individual is individuals, everybody, because now as 2014 came about, everybody needs to have some type of qualifying health insurance. So the shop, who can purchase in it? If you are an employer and you choose to provide health insurance to your employees and you have 50 or fewer full-time, 50 or fewer employees, you can go into the shop and purchase one of the healthcare plans that they have. You must have at least one common law employee. What is a common law employee? I kind of say if it walks like a duck, it quacks like a duck, it's a duck. Meaning, if you have somebody who's working pretty much full-time at your place, pretty much reports to you, and for all intents and purposes, is an employee, it's an employee. Mind you, employee is defined as somebody for a W-2. 1099s are going to go get their own insurance. So if you have 100 1099s underneath you, contractors, they have to go get their own insurance. So don't worry about that. Your employees are your W-2s, okay? For the shop, you're going to offer coverage to full-time employees. In the federally facilitated shop, that means somebody who works 30 or more hours a week for you. And yeah, so if you want to see how many full-time equivalent employees, which I'll go over those definitions in a little bit, you can go to healthcare.gov/FTE-calculator. I know all the bad press about healthcare.gov. It actually has a lot of useful information, so I even go and do my research on that. So it's not that bad. It's not that scary. So if you are a self-employed business owner, you're going to go in the individual marketplace. Everybody else, if you're a business owner and you have 50 or fewer full-time employees, you can go and purchase your insurance in the shop. Okay? This one I'm going to kind of gloss over a little bit because this is more towards federally facilitated marketplaces, and because I do this presentation and I'm the only fortunate person in the United States of America to do this, I deal with 3 territories, Northern Virginia, DC, and Maryland, so I have 3 different marketplaces to know about. This is more towards any small businesses in Virginia or in Maryland. Virginia is it's a federally run marketplace. Maryland is a state-run marketplace, but unfortunately, Maryland's website is not really working, so you have to kind of do it like the federal one. So I'll touch upon this again. If it causes you a headache and you are not in Virginia or Maryland, don't worry about this. But pretty much all it means is that if you're in Virginia or Maryland, then you cannot actually go online and purchase your insurance. Okay, that's all it means. You're going to do what is known as direct enrollment, which you talk to an agent, you talk to a broker, and you make sure you get a shop qualified healthcare plan. My analogy with this is, remember back in the 80s how we used to buy plane tickets? You called up a travel agent. You called up American Airlines and you bought a ticket that way. That's what you're doing this way, okay? So instead of going to kayak.com, you're actually speaking to somebody. So it's not that scary, really. Again, this is more towards federally facilitated. That's why I'm going to touch upon it. So for the shop, if you are in DC, you can go ahead and purchase, you can go onto DC HealthLink and purchase your insurance. That is perfectly fine. Whether you're doing an individual insurance plan or you're looking at the shop. So you're looking as an employer for your employees. Either one, you can go ahead onto DC HealthLink. For Maryland, Virginia, you're gonna have to talk to somebody. So as it says, works directly with an agent, broker, or insurance company. And one word of caution I will say is if you are in Virginia and Maryland and you are looking to receive that healthcare tax credit as a small business owner, make sure when you speak with your agent, your broker, the insurance company, you are getting a shop qualified healthcare plan. That's very important because to receive the tax credit, remember that's if you have 25 or fewer full-time employees, average annual wages of $50,000 or less. You as the employer are contributing 50% or more to employee self-only premium costs. Fourth thing, it needs to be a shop qualified health care plan. The agents, the brokers, the insurance companies, they'll know which ones they are. Again, more about federally facilitate, I just have to because we just have it all over here. As I said, shop marketplace, go ahead, phone them, phone your agent, your broker, and all that type of stuff. They'll do it. For DC HealthLink, you can also call them, I I do have their number though. I can give you their number if you want to give them a call or online. There actually are people, and if you are having problems with that, let me know because I will go and talk to somebody there. Okay, are we okay now? Are we all doing all right here? Okay, now we get into the big boy. The employer shared responsibility payment. So this is the business mandate, this is the penalty, whatever you want to call it. The actual terminology is employer shared responsibility. We're going to talk about businesses with 50 or more full-time equivalent employees. Okay, and just to note, pretty much nearly 96% of all firms, all small firms in the United States are going to be exempt from this business mandate because either you don't have enough employees or you already provide them health insurance, you offer them health insurance. Two key definitions. Full-time employee, as I said, is an employee who works on average 30 hours or more a week. You've also probably heard in the media a full-time equivalent employee. That is an employee who by themselves does not qualify as a full-time employee, meaning they do not work 30 hours or more a week. However, in conjunction with other employees, they do. Meaning, you have two employees, each working 15 hours a week, that's one full-time equivalent employee. You have 100 employees, each working 15 hours a week, that's 50 full-time equivalent employees, okay? Pretty simple on that one. Again, there is a calculator, as I showed on the other slide, which again, Dower said this is all gonna be available to you, so you can go and figure that out, how many you have. So I kind of like to say, it's kind of like keep hashtagging until you get to 30, and that's one full-time equivalent. So, here we go, ready? Ready? Want to see if you're gonna pay anything? So, the employer shared responsibility payment. If an employer meets 50 or 100 for 2015 full-time equivalent employee thresholds, there are two scenarios you're going to have to pay, okay? So we know that this business mandate, the business penalty has been pushed off till 2015, okay? But the administration went ahead as to provide even more transitional relief, is that if between 2015 and 2016, if you have fewer than 100 full-time equivalent employees, and you choose not to offer them health insurance, there is no employer shared responsibility payment, okay? That's why you're gonna see the two numbers, 150. Bear with me on these. So, let's say it's 2015, okay? And you have 100 full-time equivalent employees. And you choose not to offer them health insurance because it's just too expensive for you. And one of those full-time employees goes into the individual marketplace, because remember, everybody has to have some type of qualifying health insurance right now. So they go in the individual marketplace and receive what is known as the advanced premium tax credit. Then you'll have to pay. Now, again, we're looking at 2015. Now remember, if this were 2016, we'd be looking at the number of 50, okay? That's why I'm like, it's gonna be a lot of numbers thrown at you. But 2015 is for 100, 2016 is for 50. So it's 2015, you have 100 full-time equivalent employees, and you choose to offer them coverage, but it's healthcare coverage, but it's deemed unaffordable or doesn't meet minimum value. I'll explain what those are. And one of those full-time employees goes in the individual marketplace and receives this tax credit, you're gonna have to pay. Now, I mentioned the words minimum value and what's affordable. So the definition of minimum value is that the plan must cover on average at least 60% of the plan's total cost of incurred benefits. Meaning that if the doctor's appointment costs $100, the plan must cover at least 60% of that, $60, $40 out of pocket, okay? HHS and IRS have an online calculator to figure out if the plans that you are offering currently are deemed to meet minimum value. Affordable coverage. This is where it's definitely, as Peter has heard, the lawyers come into here into writing this law, because the law says coverage is unaffordable if the full-time employee's share of the self-only coverage costs more than 9.5% of his or her annual household income. Then they put in the affordability safe harbor, which pretty much, if the plan that you are offering the employee, the self-only premium cost is less than 9.5% of what is reported in box 1 of the W-2, it's affordable, okay? Because again, you don't know your employee's household income. All you know is how much you pay that person. So as long as the employee self-only premium cost is less than 9.5% of box 1 of their W-2, you're in the clear, it's deemed affordable, okay? Like I said, a lot of numbers, and I'm sorry about it. So there's the transitional relief, as I said. If you have between 50 and 99 full-time equivalent employees, you will not be subjected to the employer shared responsibility payment in 2015. If you have 100 or more full-time equivalent employees, you must cover on average 70%. In 2016, it's going to go up to 95% of your full-time employees and their dependents to avoid the employer shared responsibility payment. Now, if you fall between the 50 to 99 category, you must meet this requirement, which pretty much means you did not decrease how many employees you have so that you fall underneath this, is pretty much what that's saying. Like I said, I'm breaking this down as easily and quickly as I can. So if you have 200 employees right now, as of 2014, 2015 comes around and somehow you fired 101 because you had to downsize, that may be a little bit suspicious there, okay? But if you have 98 right now and you have 98 in 2015, you're fine. Now, stick with me on these two, okay? This is how much you're going to have to pay if you meet certain criteria. So remember, I said there's the first scenario, which you choose as the employer not to offer coverage to your full-time employees, and one of those employees goes in the individual marketplace and receives the advanced premium tax credit. Then what you as the employer, that's going to trigger the payment. So what that means is that you as the employer, ready for this one? Okay, this is why I like the whiteboard. So go back to like 5th grade math and we had parentheses to do our mathematical equations. So this is what you have to write down on your paper. 2,000 times parentheses, number of full-time employees minus 80, end of parentheses. That's the equation for 2015. Okay? For 2016, it's 2,000 times parentheses, number of full-time employees minus 30, end of parentheses. Okay? Now, if you choose to offer coverage, but it's deemed unaffordable or doesn't meet minimum value, and one of those full-time employees goes into the individual marketplace and receives the advanced premium tax credit, then you are on the hook for 3,000 times the number of employees who received the tax credit. Usually I don't have enough time, but I usually have an example for this, but I'll talk you through the example in a second. So I keep mentioning this advanced premium tax credit in the individual marketplace. To receive this, an individual must purchase insurance in the individual marketplace, okay? Because what's happening is you as an employer are choosing not to offer them health insurance, or you're offering them some ridiculously priced health insurance that's just not affordable. Now, so this individual person doesn't have to pay, because again, if you don't have, everybody, have some type of qualifying health insurance as of 2014, and you do not meet one of the exemptions, you're going to have to pay when you file your taxes next year. It's either $95 or 1% of your annual household income, whichever is greater. So it's probably not going to be $95 because otherwise you would fall under the exemption. So this person is going to the individual marketplace and is going to purchase insurance. Now, this is where it depends on how much you pay. Remember, I said 2 questions as a small business owner. How many employees? How much do I pay them? How many employees? Because we're looking. Do you qualify for the tax credit? Are you going to have to pay the employer shared responsibility payment? How much do you pay them? Because for an employee, for an individual who's buying insurance in the individual marketplace to receive this tax credit, their income must be between 100 and 400% of the federal poverty level. For an individual, I believe 400% of the federal poverty level is $45,000. I want to say $930, otherwise $630. I mean, a couple $100 here or there. So this is why it's important, because guess what? Let's say you hit that threshold of 100 full-time employees. You're saying, I'm not offering them insurance. All of those employees make $50,000 and they're all single people. And they're filing as single people. They're a household of 1. They go in the individual marketplace to purchase insurance. They're not receiving that tax credit because they're above the 400% federal poverty level. So this is why it depends on how much you pay them. Okay? But if they're all at 30,000, they're all going to receive the tax credit you're paying. They also must not be eligible for government-sponsored programs, TRICARE, Medicaid, Medicare, all that type of stuff. Okay, I don't have the examples. Like I said, I'm trying to do this really quickly. So I'll talk you through a couple of scenarios that may happen, okay? You have 100 full-time equivalent employees, okay? However, and you choose not to offer them health insurance, okay? And one of those full-time employees goes into the individual marketplace and gets the advanced premium tax credit. But you only have 25 full-time employees on the books. You are not, normally that would trigger the employer share responsibility payment, but remember that equation that I gave you? 2,000 times the number of full-time employees minus 80. 2,000 times 25 minus 80 gives you negative something or other. So you're not on the hook for anything because you're in the negatives at that point. So what you have to worry about is you as the employer, your responsibility begins and ends with offering affordable coverage that provides minimum value to your full-time employees and their dependents, okay? So the full-time equivalent employees come into play to see if you hit that 100 employee threshold. In 2015, 2016 it's 50, to see. However, you're only responsible to offer health insurance that meets minimum value and is deemed affordable to your full-time employees, okay? So remember, full-time is 30 hours or more a week. So it's kind of like those full-time employees come to see the full-time equivalent, your part-timers, for lack of a better term, so I don't confuse you with that, come into play to see if you hit that 100 employee threshold. But let's say you have 100 full-time equivalent employees. So you have 200 people that work for you, each one working 15 hours a week. You have 100 full-time equivalent employees. You are only responsible for offering health insurance to your full-time employees. So part-timers are going in the individual marketplace, okay? So you don't have to worry about that. Now, if you offer health insurance to your full-time employee and they decline it because they want to go another route, they want to go in the individual marketplace, they want to go through their spouse's coverage, whatever, you're not on the hook for anything either. That's not going to trigger it. So, trigger the payment. So remember, all your responsibility as a small business owner is to offer health insurance that's deemed affordable and meets minimum value to your full-time employees. Okay? You must also offer the coverage to their dependents. Now, a dependent under the law is defined as a child. Your spouse is not your dependent, okay? As a child under the age of 26. After they hit 26, they're on their own. Now, everybody kind of freaks out because like, oh my goodness, what if the person has like 5 children? Remember, to receive what is deemed affordable or to receive the tax credit, you're looking at the number of only what is self-only employee premium costs. So even if they have 50 children and their premium is going to be $5,000 a month, that's on them. You're only looking at how much they would be normally charged as one individual, self-only premium costs. Okay? That's it. That's the law. If you want more information, if you have a lot more questions, which I'm sure you do, I have my business cards with me. You can go to these websites. Like I said, healthcare.gov does have a lot of great stuff. I hope I kind of explained it a little bit. I know usually it's an hour-long presentation, so are we taking questions? You're welcome.